McLaughlin, Clint McLaughlin, and Stu Hughes. Before we get started, let me read you our disclaimer. The risk of loss in trading futures and/or options is substantial, and each investor and/or trader must consider whether this is a suitable investment. Past performance, whether actual or indicated by simulated historical tests of strategies, is not indicative of future results. Trading advice is based on information taken from trades and statistical services and other sources that Midwest Market Management believes are reliable. We do not guarantee that such information is accurate or complete, and it should not be relied upon as such. Trading advice reflects our good faith judgment at the specific time and is subject to change without notice. There is no guarantee that the advice we give will result in profitable trades. In today, February 8th, 2023 USDA report, we saw numbers from the 22-23 U.S. grain ending stocks, 22-23 world crop production, and 22-23 world grain ending stocks. Pat, would you like to start us out today and talk about the world production and numbers?
Well, thank you, Brenda. So this report there was very little difference from trade guess. I thought the trade did a great job of dialing in on the changes they thought USDA might make. There were no changes in Brazil from last month, 125 million metric ton corn crop and 153 million metric ton bean crop. Both of those were spot on the trade guess. However, as anticipated, Argentina, there were some pretty good cuts. USDA kind of took the knife to both of them. Last month, we were 52 million tons of Argentine corn. They came in at 47, and that was 1 million under the trade guess. Beans last month for Argentina were 45.5 million metric tons. Today's number from USDA, 41. That is also 1 million tons under the trade guess. As far as world grain ending stocks, they again were kind of spot on. 295 million metric tons of corn, only down 1 million tons from last month. Soybeans at 102, down 1.5 million from last month. And wheat, 269 million metric tons, up 1 million tons from last week. So you can see those numbers are very similar. Nothing here is a market mover. I would like to point out that even as we dial some of these numbers down on Argentina, there are analysts well below this. There's some prominent analysts down around 38 million metric tons of beans. And when you look at those numbers, that's still a 20 million metric ton larger all-American soy crop than last year and 6 million tons of corn. So there's still some bearishness out here. And the other thing I would point out on South America is where we go from here is the last half of February, first half of March, very important for Argentine weather and southern Brazil, as there's still room to move this crop either bigger or smaller. Back to you, Brenda.
Thank you, Pat. Stu, would you like to comment on the U.S. corn ending stocks?
Yeah, sure. Corn ending stocks average trade guess was around 1.262, I believe, and the actual number came in at 1.267. So they're right on the average guess. Not uncommon for USDA to kind of punt on some months. And maybe the one thing kind of surprised me this month, they did not change exports this month. I believe 4 of the last 6 reports, USDA's actually trimmed exports by about 100 million bushels each month, but this month they actually decided to leave them alone. So that was probably maybe a little bit of a surprise to me. They did take ethanol demand down 25 million bushels. Weekly grind has been running around 102 million bushels a week. Really needs to be about 106 million. So they did take 25 million off of that. Ethanol demand number, it's down to 5.25 billion bushels. So they really still need to pick up the pace here for spring and summer, even to reach that goal by probably at least 3 to 5 million bushels a week. Other than that, they did not change feed demand. Doesn't surprise me. They just had a quarterly stocks report to work with last month. So I don't look for USDA to make any changes in the feed demand numbers and probably until that April report after they get the March quarterly stocks. That was the only change that they made in today's numbers, and trade was very close to it. So small change from last month. So no change, I think, in this market here, drifting sideways, choppy lower probably is going to be the short-term direction here, but nothing in today's report to change the attitude of the trade.
Great. Thank you, Stu. I'm going to take a quick moment to talk about the U.S. soybean ending stocks. Trade had an average estimate of 211 million bushel ending stock, which was up 1 million bushel from the previous report. The USDA released their number at 225 million bushel for the 22-23 year. This was a 15 million bushel, there was a 15 million bushel cut in crush, which made up for the difference in the ending stock number. There was no change to the export estimates. The current sales pace for exports is at 87% of the USDA's yearly estimated number. The 5-year average pace for this time in the marketing year is 79%. So we're well above the pace right now. Exports could slow down as Brazil is 25 per ton cheaper than the Gulf right now. The average on-farm price for beans was raised a dime today to $14.30 a bushel, up from $13.30 a year ago. After the report was released, markets were trading lower, with March trading down about 10 cents, but had rebounded and spent most of the time trading within a few cents of even today and closed slightly higher. November had the same reaction, where it traded down about 10 and then spent most of the day within a couple cents and closed a few cents higher. I believe that the markets will stay in a narrow trading range for the near future and turn back to focusing on weather in South America. Both the dryness in Argentina, as like Pat mentioned, they are looking at turning to a dry period again for last half February and into March. But also watch in Brazil, as in the western and central region, they are very wet and are having some pressure on their harvesting soybeans getting behind schedule. So Clint, would you like to comment on the wheat numbers today?
Sure would, Brenda. Thank you very much. So the wheat ending stocks came in at 568 million. Trade was really looking for 578, so a slight decrease from expectations there. Last month we were at 567, so very, very little change at all from the wheat. I guess if I had to point some things out here, I'd kind of look at where our ending stocks have been over the past couple of years in wheat, and it kind of tells the story. Last year we were at 669 million. This year we're at 568. So with everything going on in the world, we have seen a 15% decrease from last year to this year in ending stocks here in the U.S. To put a little more perspective onto it, if you go back to like 2020, 21 marketing year, we came in at 845. Stocks to use ratio at that point in time was around 40%. And then it just slowly started tailing off year after year, getting us down to where we are now, which is just shy of a 30% stocks to use ratio. So that probably merits, the higher prices. One other thing that I found interesting in the report is I like to follow the average farm price. And USDA did lower the farm price from $9.10 last month, $9.10 a bushel, to $9. And that is based off of the actual cash price that producers are anticipated to take over the course of the marketing year. And if you look at where we are right now, cash price wise, we are not looking at $9. We are well below that for most areas of the country. And so I guess what that's telling me is that there probably was a fair amount of pricing done, as the prices were higher with the whole Ukraine-Russian war. But I don't know if there was enough done. And my anticipation moving forward is that the wheat really is going to struggle to gain any significant traction. I do believe that, we could have problems here in the U.S., particularly in the hard red wheat belt, But I don't know that that has enough global impact to really get us back to the prices that we have seen. And I feel like producers ought to be pretty defensive, if anything, in the $8 to $9 camp. So that's my thoughts on that, Brenda.
Thank you, Clint. Gentlemen, is there anything else either from today's report or in the news that you would like to discuss at this moment?
Brenda, one of the things that I'm concerned here in the long run, and this isn't something that's going to move the market today or tomorrow, but our relations with China are obviously strained. When the Ukraine war broke out, China immediately started cutting a deal with Brazil, which has been done. And used to be they were just imported Brazil soybeans. Now we have corn flowing out of Brazil into China as we speak. So there's some competition that we weren't used to. We have Mexico rattling the saber, saying, who is our largest corn customer, saying they're going to cut our corn exports, their imports from us by possibly 30 to 40%. I think there's some non-GMO issues in this, but headlines that concern me in the future. And it really, I think, one has to be a little defensive of these new crop prices as well, because if we have a good U.S. crop, we could be significantly lower by fall.
Thank you, Pat. Clint or Stu, would you like to add anything for today?
I'll just chime in on corn basis. Historically strong, obviously. Short crop, Kansas, Nebraska, Dakotas has corn basis very strong in the western, especially the western Corn Belt. But even in this area, just been watching that Fort Dodge neighborhood. They're back up to the mid 50s for April, May. We've seen Iowa Falls, this area, go get back up to 30 over. And just kind of feels like that 25 to 30 over area is been able to attract enough bushels and get everybody's belly full here for at least the next 30, 60 days. So I can kind of anticipate this basis strength continue until we get new crops, especially that western Corn Belt. And I think it's just going to keep getting walked forward there. So from a basis perspective, I'm kind of leaning towards, selling those premiums out there 30 to 60 days. Acres, that'll be the talk here, or get more of a focus here the next 30 days here.
Good afternoon. This is
You may be getting that.
Look at the corn market for Wednesday.
Sorry about that. I guess I'm anticipating maybe 91 million acres of corn. Doesn't really feel like today that the market's happy with the corn acres we have, with Dees corn today at 596, pretty close to last year's spring average, and beans only 1370. A good 60 cents under last year's average. So kind of feels a little bit like the market wants a few more new crop corn acres yet.
Great. Thank you, Stu. So Clint, is there anything you would like to add? Any insurance things you want to point out quick?
I guess just to recap on Stu's thoughts that, we are running right now 596, 595 areas, kind of where our spring crop insurance average is. So moving forward, we're going to start getting through the month here, and we'll get closer to dialing that in. And, I would anticipate premiums be pretty well in alignment with last year. The volatility is lower. That's another factor. It's not just about the price of our crop insurance average. It's also about the volatility. Last I checked, we were tracking in 19% on corn versus last year we were at 23%. So it's possible we could end up with a little bit higher average than last year, and yet have a little bit cheaper premiums, or maybe on par with last year, with the volatility being down. If you recall last year, if you go back and look at corn and soybean and wheat charts during the month of February, it was like a rocket ship heading out of here. We started quoting at the beginning of the month at like $5.20, and by the end it was $5.90. But that was right during the war breaking out and that whole thing coming to light. So volatility was really high. So the lower volatility might help us out here a little bit. So we will see where we end up here at the end of the month.
All right, thank you. I'd like to thank you all for taking the time to listen to our roundtable discussion today. If you have any specific questions you'd like answered regarding today's report, you can reach out to any of us. Also visit our website, midwestmarketmanagement.com, or follow us on Facebook for up-to-date information. Have a great day.